Welcome back, everyone. I am Cas Piancey. I'm joined as usual by my partner in crime, Mr. Bennett Tomlin. How are you today?
I'm doing well. How are you, Cass?
I'm doing good. I'm hoping my internet stays okay today because we have a very special guest, Travis Kimmel, CEO of a startup. We've had him on previously. One of our favorite guests. How are you, Travis?
I'm doing great. How y'all doing?
Awesome. We're here to discuss venture capital with you, which is a topic that we bring up pretty regularly with a lot of animus usually.
To me, the arc is sort of like, there was like a lot of things, like just sort of capitalism generally. There's this original intent around it that's really good. Like I'm a capitalist myself and I believe in it. And yet you look at the way that it has been playing out lately. And it's complex because there are a lot of people doing that sort of, healthy capitalism. And then there's a lot of like weird regulatory capture stuff that goes on as well. So I think, certainly open to talk about the history. You may know more about it than I have. I mean, I've read a few books on it, but I think that we're at this weird place with venture capital where it has sort of escaped containment. So for a while, we had this, it was very much a Silicon Valley thing. And I think some of the best venture capital is still there and in New York, it's on the coast. And I think that the way that venture has escaped containment is really strange because now they all have media companies, right? So if we think, we could sort of just get into it here. If we think about venture capital, the effect of having a large megaphone around a certain aesthetic that works really well. Well, what is that aesthetic? That aesthetic is growth companies. Growth companies are a little weird and you have to be a little broken to try to go make one. Say from experience, because it's really hard and there's a lot of risk on the entrepreneur side, more so than on the venture side, because they're building like a proper portfolio. And so one of the things you want to look for in funding these companies is zealots. So it's a little bit of a zealot culture, right? So it's, to my mind, there's this strange thing where like a messiah culture inside of a little company that's doing something incredibly hard is like kind of fine because it gets you through the really hard times where you're not sure you're going to make it. But then the distribution of messiah culture generally into Gen Pop is like, I don't know if we want that.
Well, this is interesting to me because this brings up to me when I get into the history of Silicon Valley and venture capital, because in my opinion, venture capital started in Silicon Valley. So Fairchild Semiconductors is known as the initial venture, as we know venture capital today, that was when it happened. For anyone that doesn't know, they really got integrated chips started and chose to use silicon, and they were known as the Traitorous Eight. They left Shockley and form their own company. So there is a little bit of a few things that I think about as still being involved in Silicon Valley and venture capital today, which are a bunch of people screwing over someone to start their own thing. And also what you're talking about, which was a zealotry, but a zealotry in relation to wanting to innovate in the fastest way possible, passionately. And I don't think that is the goal in venture capital anymore.
It's in there. It may not be, the single goal or even the median goal, but it's still around. And I think there's a couple things I'd say on that. One, that pattern of innovation at all costs works really well in software. It's one of the reasons I like staying in software because software is a little easier to innovate at all costs when the downside of screwing up is the site goes down and people don't have the SaaS product you're selling them. That's not really, there's nothing really violent about that. It's sort of, there's a little bit of a broken promise and you got to make that up to the customer and you got to try to prevent that. But you can move very quickly and be kind of safe a lot of times with software products. And then when that same ethos gets translated into other domains as venture expands outward. So Theranos is a great example that everybody sort of loves to talk about here. Move quickly and break things when you're dealing with med tech. It's just not clear that that's a lean startup type of problem. Mm-hmm. And I think anytime we try to take this into another industry where we're dealing with I think you see a lot of the drama around Tesla here, right? Okay, let's just ship something before it's ready and then keep iterating on it. Cool, that's great, unless it's the thing driving my car. And then I kind of want to be a late adopter there.
See, I started laughing there when you brought up Tesla because you were talking about how this move fast and break things type of model kind of works in software, but it doesn't work as you head into other domains. And I was going to talk about how software is eating everything, as they like to say. And the example I was just about to bring up was autonomous vehicles being distributed perhaps before their time. And then you jumped right to there.
Yeah. And I think, you see this in the packaging of other products as well. Like I may get this example a little wrong, but it's directionally right. Before the latest Boeing thing, there was some other Boeing thing where they were selling these planes and they had like different tiers, almost like SaaS pricing. So you got like the basic model and then you got the mid-tier model and you could sort of buy whatever autopilot control system. And like, it turns out you kind of needed the mid-tier one if you didn't want the plane to stall out and fall out of the sky. And I'm just not sure we want to apply these lessons that come from this sort of like blast scaling ethos around software where I think it's safe to do that if you're mindful of the externalities and there's no actual damage other than like the app being unavailable. But as soon as this stuff starts to get distributed as like the way that business is done by people with these large megaphones, that's where you run into some real issues.
And I think that's a really interesting angle that we actually talked about a little bit on here way back in one of our very first episodes, like episode 8 or 9 or something. We were talking about when Coinbase was launching their media business and compared it to some of Andreessen Horowitz's efforts in the media landscape with kind of that same conclusion that entrepreneurial success requires an unusual type of person in an unusual type of circumstances. The type of success that is created there generally is not going to replicate broadly or across other circumstances or other types of people, but there was a tendency to use these stories to make it seem in these media projects like it did generalize more than it did. And then there was a second thing that you'd see these media companies sometimes do, which would be to take kind of unsuccessful examples or ones that didn't seem like they were likely to actually lead to the same kind of massive entrepreneurial success, but match it up against previous successes on its way there to like, they wanted things that were not...
make the case.
The media effort they were doing was like part of their making the case that these other firms were like the big successes.
Yeah, I mean, it might be useful to talk through like, okay, so, just laying the groundwork here. What is venture capital today? To my mind, you get a pool of money, which is often, like pension money or whatever, these like large LPs, you pull this stuff together and then you go fund a cohort of companies. And if you're investing early on, so like, let's just say the companies from inception, I mean, most of those are going to fail, just like outright. And so the model requires you to think about each of these bets almost the way you would a portfolio of options. Like they've got to have asymmetric upside. That position has to be able to be at a 20, 30, 40x. So you're only investing in stuff with really big TAM. This is why there's this obsession with market size. Like if you're going to invest in something with a small TAM, that portfolio, you're kind of wasting a bet. Out of 10 bets, maybe 2 to 3 of those return like a double or a triple. One of those, it makes the whole thing, makes all the rest of the 10, and 7 of them just like go to 0 or some little like acqui-hire thing. That really scopes how VCs think about what companies are investable. And then I think if you dig down one more step there into the operator side of it, you also want a business that is capable of being a growth business. And that means it has to be structured such that the gross margins are super fat. So you're talking like 80+% gross margin. So like the beauty of software basically is in this growth model where if I stand up a web application and I want to add a customer, it costs almost nothing. Like there's a little bit of server cost there, but it's more or less free. And so that's what defines these growth companies is you can then take all of this capital you have and use it on sales and marketing and further R&D. And you really just try to like grow as fast and as aggressively as possible. Now, the failure pattern around venture is when you get a business that is sort of, you all, I'll use cooking the books because you all appreciate it. But the way that you categorize a P&L, there's actually just a lot of discretion in there. So sometimes what you'll see in the world where I'm from, which is like SaaS software, is that you'll have stuff that should be rolled into COGS, which is cost of goods sold, and it's not. And so like, let's say you evolve you have a software product, but like nobody really knows how to use it. And so you stand up a CSM department, which is customer success, and they handle like renewals and they help onboard people. And if you unpack what the customer success team is doing, and you see that it's basically just like services. Well, now you're running a business that's a little bit more like McKinsey or, you know, something like a consultancy than you are a software business. So that's the pattern in B2B SaaS. But I think if you generalize that out and you look at like, you know, these people who are doing manufacturing or whatever, are they really like, can we really think of them as a tech company? Do these comparisons that you alluded to here, like, do they really track? And are you going to get the kind of gross margins out of there that allow for this really rapid growth and a lot of control over the business's destiny? And just to be clear and like net out what control over destiny means as a euphemism, you know, that means that most of your costs are labor. And if the economy turns and your growth falls off, you have the lever you have is to cut labor. So it's like, it's a fairly brutal model to really scale very rapidly. And you see this in tech, and it contributes to the sort of short average tenure of tech staffers. Like there's just not a lot of mutual loyalty there in the way that there might be in a manufacturing business.
So to me, a lot of the things you're discussing right now are like, even as they are quite tenuous for venture capital. And the reason I say that is because of things like cryptocurrency. Now, I don't mean this in a positive way. I want to be clear. Like, I'm not saying, oh, cryptocurrency is coming along and defeating venture capital and it's good. I'm saying this is a conversation I've had with a lot of people. There's this new VC class, like A16Z, Anderson Horowitz, or I'm trying to like a lot of the PayPal mafia guys, you know, these types who are all into they love cryptocurrency, but they love cryptocurrency not because it's innovative and changing things. It's because their vesting periods are shorter. It's because they can sell and dump on retail faster. It's because they don't have to wait for it to IPO. It's because like the reasons that they love it are for the greediest reasons. And I genuinely think that this is something that is going to help self-destruct part of venture capital.
It could. I mean, there's sort of I think we have to consider what role we want these various agents to play. Right. Like from my perspective, a venture capitalist, their job, their mandate is to like take that money and get a return. And, you know, it's a big return. And so if you create a sort of societal set of incentives where you can get liquidity in sort of a shadow public market very quickly, in some sense, it makes sense to me that venture has gravitated toward that. Like it is just sort of it's like water flowing downhill. And I don't know, when I rant about crypto, it's less about those specific players, because I look at venture capitalists and I say this lovingly, like they're sharks. You know, you will get, when you go in there as an entrepreneur, you'll get brutal feedback, and part of your job is to like take that feedback, to be able to receive it, because it's often very direct, and just sort of like intake it and react to that and like change your business so that it is a little bit more aggressive. And so the idea that you have this set of fairly aggressive, upside-oriented investors who very quickly notice that they could, get liquidity faster and de-risk their entire investment. In some sense, that's their mandate. And in some sense, they're playing with like pension money. I agree that I don't think we want to see more and more of that in the world, but that is probably a regulatory framework problem, right?
I mean, yeah, maybe. So part of this for me, it gets back to exactly the beginning of our discussion, where I was saying back in the early days of venture capital, innovation was put more, maybe it wasn't completely the only priority. I think money is always the number one priority, but I do think that innovation was bigger priority back in the 1960s, 70s, and early 80s, maybe. But like by the 80s, 90s, you have a complete transformation to like, okay, so money is the only priority. And now we're at late game. You know, like not only is money the only priority, but like the fastest way possible at the highest returns imaginable. And like it almost feels like a Ponzi scheme. Like it doesn't. In fact, this is something. For what it's worth, our discussion with Mark Cuban did not go well. Let me say that. It did not go the way we wanted it to. However, one of the things he said, I asked him if it's I was like, is this a Ponzi? Is the investments, this kind of thing, this venture capital, all these seed rounds, etc., is this it sounds like a Ponzi scheme. And he's like, it is.
So I would take issue with that. In that the portfolio should be constructed in such a manner that it's not, right? So if you're investing in companies and like a bunch of them go to zero, there are things in there that are Ponzi scheme like, but it should be de-risked by having a proper portfolio. Now, when you think about crypto, I mean, if we circle this back to crypto and think about, let's address the root cause of why we might not want this type of structure around, right? Like, let's look back at like wildcat banking and all this stuff. We tried this before. It's not like this stuff is new. So I think the fear is not so much, for me at least, is not so much that people are behaving badly. Like some percentage of people always behave badly, but it's more that we are creating structures that seem to be unstable in a way that we might not like later. So if we take a bunch of capital and we funnel it into a sort of negative sum game, which I would argue that most crypto is, I think we would agree on that. What'll happen over time is that the capital coming in from these LPs, initially it'll be awesome because like these initial rounds, like you get a bunch of returns or whatever, but eventually that stuff is unstable and it falls over. And if it falls over, you destroy a bunch of capital in that capital will no longer come from these LPs to fund ongoing innovation. And if I were, I'm sort of like talking my book here as an entrepreneur, that's what worries me about tech. I think tech and the venture ecosystem are sort of like, they're one unit. Like that capital ecosystem is a thing that self-sustains. You get these founders who have an exit. I mean, I'm a second-time founder. I've done some seed investments, and that capital sort of goes back in to fund future innovation. But when we shift to a psychology where like it's just about the gains and it's very risky sort of money transfer stuff, like it's not really accretive over time, that's super problematic. Because what will eventually happen if we're right about this stuff and that it ends up being a negative sum game is there will be this big rinse, and a lot of that money that they could have been sustainably accretive to the economy by investing in tech in these super risky ventures, most of which fail, but which we found a way to bundle together and make like a pretty good uncorrelated return. That's beautiful. Like I think venture capital is beautiful. Done right, it's one of the big growth engines of the American economy.
I've been preparing today to piss Cas off by doing a defense of venture capital that went in kind of that same direction, which is that most venture capital investments go poorly. I think most venture funds return sub S&P 500 with like the few outliers carrying like the bulk of that market forward. And like even in the funds that return outsized returns, that's driven by like a small portion of companies inside of those. And if you assume that having a reasonable portion of new companies trying new things is a societal good, then coming up with a socially acceptable way for high capital former entrepreneurs to gamble on which things might do well helps you get more of that type of thing in the world. However, that works by putting capital at risk, by having a chance of not having the return. And some of the problem Cas and I have had with the cryptocurrency investments that he was alluding to before is that like by finding a way to exploit a group outside of the rich capital class, like if A16Z, actually, let's not say A16Z, let's say a hypothetical firm in California is able to get a 90% discount on a token they know is going to go on sale in 2 months or whatever, and then they immediately dump it on retail. The issue with that compared to like regular VC in my mind is that they're not really at risk. The entire risk is shifted from the people who can bear the risk, the moneyed interest, to the retail people buying the token. And so like that level of move makes complete sense for their incentives, right? These venture capitalists want to make as much money as possible, as quickly as possible. But like you're kind of talking about there, it corrodes whatever societal role we believe venture capital or this form of investing can play. That makes it make sense to me why Cas thinks that would self-destruct venture capital. However, I don't know that capitalists finding ways to make money for themselves quicker generally results in those capitalists destructing.
Yes. I guess to react to what you said there, I sort of agree that the structure is problematic. And part of the reason it's problematic is again, like tech and venture so share a culture. Like it's a unified capital ecosystem. It's a unified culture. It's hacker culture, right? And like we get in trouble for this stuff all the time. It's just sort of, we're like Napster kids. We're like making jokes about like, you wouldn't download a car, and we all laugh. I'm like, I'd download a car if I could. It's that there's this ethos about it's a little anti-establishment. It's very like hacker culture is still alive and well. And now think about what happens when you take hacker culture into the realm of like investments and VC. They're gonna find the exploits. Entrepreneurs are people who go out and they find the exploits, and we gotta like shore those things up. And I think venture capitalists are gonna find the exploits in a regulatory environment, and we should expect them to. It's almost like a function they perform, and then I think we should follow on and decide whether or not that's something we want to keep doing. Like
devs need to patch this exploit.
I think so. I think like this is where I'm like, come on, devs. And the devs are basically people 85. In Congress who don't know what the hell is happening. And so we have a real problem here where the devs are way out of sync with what's happening. To my mind, I look at it and I think it's just like, it's a fairly simple fix. We just need to look at these things which are like public markets as defined by, public investors are able to invest in them without a bunch of accreditation stuff, and then regulate them like public markets. And what we see is already the preemptive narrative pressure to say, well, no, it's the accreditation that's wrong. And I think that is very toxic. Like, to my mind, accreditation it's pretty good if you're going to invest in a hyper risky venture. I think you want to validate that the person making that decision can lose that money, because a VC fund will invest in 200 deals or something. And if you're an angel investor and you're not doing it professionally, you're just sort of doing it as a punt. I mean, I have like 3 or 4 angel investments, right? It is not a portfolio. It's not even rational. I fully recognize that. But they're sort of, I like the entrepreneur. I like the idea. I think you could go somewhere. And it's like, it's a level of capital that's acceptable. So I think the tension that exists now is you've got tech culture, which is doing its thing. It's finding the exploits, and society writ large doesn't quite know how to handle that. And we see that in a lot of arenas right now.
The only thing I'm taking issue with here is this goes back to the very beginning again, or the historical significance of venture capital, where I don't think I've expressed this yet during this podcast, but to me, the beauty of early venture capital was that it was not everyone fighting each other, which I do think is like, this is a huge part of venture capital now, where like, I'm trying to like, you're not gonna, if you're investing in Samsung, you're not gonna be investing in Apple at the same time, or maybe you are, I don't know. But the idea is you want one to succeed and the other to fail. Like, it is zero sum, if not negative sum. And I don't think that was necessarily the case early on, because what you had was you had government, academia, and private capital working together to innovate. And you could argue it's because we were at war. You could argue it like whatever the reasoning is, I don't know. But to me, that was the reason that it worked so well, that maybe, I guess I haven't checked the data, but I would assume that there was probably less return and less risk also. But also, you had people straight out of college at Stanford getting jobs. You had them working for Lockheed. You had them working for, government contractors. But also Fairchild. You had them working for a bunch of different people. You had a bunch of options. Everyone was working together. And now everyone is not working together, and everyone is pushing for someone else's failure. And again, this is I don't know how sustainable these trends are.
Well, if you think about it, so there's this thing in software called Conway's Law. It is this observation that a product will begin to mirror the org structure that created it. It's fascinating stuff. I think there's something sort of analogous here, which is that if in the good old days of venture capital that we're being nostalgic about, nostalgia always has an element of rose-colored glasses, but let's roll with it. The venture capital we want, where it's a little more co-opetition. I think part of that is that if you have an ecosystem that is pursuing huge high TAM stuff, there is just kind of room for everybody. Like, what you're basically betting on, you're trying to ride this wave of disruption. You hear about disruption a lot. Disruption is sort of like when, I don't know, personal computing was very disruptive. The cloud is a good disruptive example, right? So you have all of this, you have these legacy providers who are doing software installs, and a cloud provider comes along and is like, man, I can make way better software, and I can build it on multi-tenant architecture, and I can get it to people, a day after they buy instead of after a month-long install. And so all of the people who are creating these cloud companies, they don't really feel like maybe they're competitors in a strict sense, but there's enough room for everybody to play. Now, if you are, the more you get into properly killing an idea that already exists to just sort of replace it with something that's not really accretive to the customer and doesn't really lower the overall unit economics. Tech should be deflationary, right? We should make everything cheaper. But the more you get into something where you're doing this sort of, is it these models like Uber or Lyft, where it's like, is that really tech, or is it just sort of labor regulation arbitrage? I don't think we know yet. I think those things get a little bit stranger. And I think that it changes the competitive dynamic, because it's no longer a bunch of people building the future, which is this huge open field that we can all go snag a piece of. And now it's like, no, we actually have to get rid of the taxi union in New York to grow. That's a little weird.
I guess it's interesting to me, like what you're talking about here, because I was talking to a friend of mine about this topic just because I was trying to prepare myself for this discussion. And one of the things my friend said to me that gave me pause was that, for instance, in China, like they want to push EVs. They want to have WeChat, where like on WeChat, right? They do everything on WeChat. It's every single thing is done on WeChat. And we have nothing like that here in America. And the way they got WeChat, whether we like it or not here in America, like I'm not suggesting we do need a WeChat. Maybe we don't. But the reason they have that, and the reason they have such insane EV production right now and solar production and all this stuff, is because the government has told them, this is what we are going to pursue. We're going to work with you on this. We're going to support you on it. We're going to subsidize it. Let's do this. And then they do it. And that gave me pause, because I was like, damn, maybe that is a good point, in that is more of what I want to see when I talk about venture capital. Maybe it is that I do kind of want to see venture capital sponsored companies and stuff trying to land government contracts with the innovation that they're building and getting support from the government like they used to, which is things like, you brought up Theranos earlier. I mean, that's a terrible example, because they did try to get government sponsorships and subsidies and stuff. But it would be great to see the government push this tech and this innovation, and instead of fighting it. But I think that they're fighting it for good reason. Like there is no cooperation from anyone anymore,
Yeah, I mean, first off, I'd note that people that, there are companies out there that are getting large government grants, and they're in the public, Tesla got a ton of grants. I think that there is government money flowing toward a bunch of these initiatives. There's government money flowing towards, rooftop solar. There is a fair bit of that. What tends to, the problem there is that it changes the competitive dynamic, in that part of what you have to get good at, the front you have to get good at competing on, is sort of like politicking. And so there's an open question for me about whether we want to do it that way or not. Like, yeah, I'm gonna convert you from central planning to like Adam Smith capitalism here in this episode. I think that there are pros and cons that you can call out to each of these approaches. At the end of the day, Americans, we sort of seem to prefer that our centralization comes in the form of corporatism, which I find hilarious, that we don't even really see that, that can also be problematic. You get these titanic companies that let's take health insurance. I love picking on health insurance. You get these huge companies, they get very established, and then they create a sort of regulatory wave that means that the incumbents always win, because it's just impossible to get through those hurdles when you're small. And to me, that is how we experience the downside of central planning equivalence, right? Like, that is sort of us not doing a great job at capitalism in some sense. And I generally find those structures to be distasteful because of their downstream externalities. But of course, I'm an American. I'm sort of wired to think of it that way. And so when I think about like, yeah, China has WeChat, but is that what I want here? Is that what do I want the initiative to be driven in that way? And is that better? Now, the downside of the way we do it is that it's sort of what we're complaining about here. Americans also do not like proactive regulation. We just don't like that. We would prefer that the regulatory motion be a little bit more like, let the thing get big, let it fall over, and then you come by and sweep up and it puts people in jail. And after the fact, you come in and you do a little bit of mop up so that people know that we don't do that anymore. And there is a story about why, because this big thing fell over. I kind of favor that, frankly. We've all been sort of inundated with a culture that reinforces that. Like we have the mythology around like precogs and thought crime. It's very American. It's woven pretty deeply into our understanding of how the economy works. And it's hard for me to break out of that conceptually, because I think that the externalities of top-down dictates can just be really bad and make a lot of people feel a loss of agency. And that is just, I just value that more, I guess, at the end of the day.
One thing I keep kind of thinking about and coming back to during this conversation is like, you talked about how a certain portion of venture capital investments are kind of a regulation dodge at this point. And like we can look at something like Uber, Airbnb, or the like are kind of classic examples of certain types of regulation dodges billed as tech companies. And you talked about how like the venture capital firms having their own megaphones in the form of these media companies or sympathetic individuals who collaborate with these venture capital firms to help them like promote their messages and stuff, kind of amplify some of the negative effects of the type of person venture capital tends to attract. And I think the other kind of wrinkle that makes this even more complicated is the goal of many venture capitalists and venture capital firms to also influence the regulations they're trying to like take advantage of dodging, right? Is like that we said the devs should come in and patch these exploits they're taking advantage of and things like that. But there is a lot of the capital being invested from these firms that make their money from the dodge, trying to ensure that those things don't get patched or that they continue to have these exploitable spaces. And so then when you end up with like the moneyed interests, like making the investment, promoting the investment through their own megaphones, and then investing so much of their own money, like both directly from the venture capital firms and then having like their portfolio firms also do lobbying as well to like influence the regulation of those investments and in those firms, I think you end up in a place where like each of those things exponentiates the potential like power and influence of the like venture capitalist and increases the risk of deleterious societal consequences when the venture capitalists like make mistakes, as they occasionally do.
Yeah.
And like that dynamic is hard for me to solve in my head.
Yeah, I think, for me, I just sort of bite the bullet, which is that I think regulatory capture is bad. Like, even if my industry is the one doing it, I just think it's sort of bad. Like we should not do it, because what happens is first off, it's anti-capitalist. Like it's just anti-capitalist, and I like capitalism. I think that what you want is these little, like the good version of regulation would allow sort of little startups to come along and challenge stuff and like do things a little differently, which you see in, I'll give you an example of that. You see it in like, some labor law stuff. Like nobody really looks at you until you're 50 people. And it's just because they don't want you to have to comply as a small company with a bunch of like nickel dime regulatory stuff. Like they're not going to hunt you to see whether you're allocating overtime properly, or there's a bunch of weird little stuff in there. And then you get to 50 people, they're like, okay, now you're like an employer and you got to play by the rules. I think that's a fairly healthy structure. I think the challenge is that anytime in a society you get a concentration of power that bands together and just throws its weight around, it doesn't really tend to work for the whole. And this is the thing that Americans don't like about central planning in our mythology. And I think we are curiously myopic about that when it comes to the private sector. Like, I'm a huge fan of the private sector, but I would like to see, you know, dozens of little companies all competing, not sort of this these large conglomerates that band together and like act almost like a corporate version of a union. And when you take the already powerful corporation and then you aggregate that into a ball where all of these companies are sort of forming this economic phalanx, I'm just not sure that's good for us. You know, I think that it's more this, for me, it starts conceptually with this idea of how do we feel about concentration of power over time? And for me, the answer there is like, the reason I like capitalism is it's sort of not that. It's in favor of smaller, you know, localism and all that stuff, that variant of capitalism. And then the second layer is like, how honest do we want to be about that in light of our other values? And how should we go about enforcing that? And this is where it gets really challenging, because the government is a large concentration of power. And it is positioned against this increasingly self-aggregating private sector concentration. And I just don't know that we have an answer for that as a society yet. Personally, I like the idea that the private sector should be this much more distributed, high agency environment. Like, it's similar to why, I mean, you guys did a great episode on community banking. It's similar to why I like the idea of having a lot of community banks, because, you know, I can go down the street here and talk to my local bank and they can underwrite me for a house because I've lived through my whole life. They kind of know me. They know the house, they know the neighborhood. That you're just never going to be able to underwrite with that level of finesse through Zillow, you know?
I mean, I think a large part of what you're talking about not liking, and feel free to stop me if I'm wrong, but a large part of what you're discussing not liking about venture capital is this regulatory arbitrage, regulatory capture. But I've been thinking about regulatory capture and arbitrage like a lot lately. Mm-hmm. And it's really interesting to me because obviously this does not just affect tech or even finance, sure, for that matter, right? Like, oh, sure, there's regulatory capture at the SEC and the CFTC or whatever, but like, let's talk about the FAA and the NTSB and let's go into all of these regulators who are the CFPB. Like, these regulators don't have, or they do have a concentration of power. They do not utilize that power to help the retail consumer. And one of the only regulators, I guess I don't know if this, I think this is the right term. One of the only regulators that I can think of that hasn't suffered from arbitrage or capture, and this is not a big one, is like the DMV, where where like everyone can agree that you need rules and regulations to be allowed to go onto the road with like a 2-ton metallic thing that's going 60 miles an hour. Like, you need to be able to be certified for that. We all agree on it. And the rules of getting your driver's license, we all accept that. And no one's trying to like drastically change it. Nobody wants to be like, actually, I would like to privatize the DMV. Like, nobody is talking about that stuff, right? This is a regulator that we all can agree on is doing a good job. Why can't we do that for other regulators?
Well, we should get a little more nuance here about what we mean by regulatory capture. So if we take at face value by theory here that Americans like regulation in arrears, meaning we like the thing to fall over, and then the regulators come in and they're like, all right, nobody do this again. I don't think we want proactive action on the part of regulators. And in fact, I think that is one of the signs that regulatory capture is sort of creeping in, is this proactive thing. And second, I think we want, if we're going with that structure where things get to a certain size and they fall over, I think it is when things get to a certain size and we don't let them fall over that we run into the moral hazard stuff. So let's take it outside of tech again and look at, the mortgage crisis that happened in 2008. We're like, okay, so we've got this country, we're like, oh, everybody wants affordable housing. Houses start to become more affordable, and we're like, whoa, okay, we don't want that. We want them to be more affordable, like conceptually, but we don't want them to be cheaper because everybody's so levered up that would actually ruin the mortgage industry. Mm-hmm. And so what you have is you have a bunch of like underwriters and bankers who are holding this debt on their books and stuff, who, when the system gets so big that it starts to collapse in on itself, approach the regulators to save them. And they make very compelling arguments, right? They're like, oh, well, this is what will happen to the average household. People are storing their savings in their homes. And like, those arguments they're good arguments. But it's very challenging for us to both have a society that does this regulation in arrears thing and also dive in and not let these large incumbents fall when it's time for that to happen. Like I think we got to pick a path there. And my path is my preferred path is the creative destruction thing, just because I'm going to commit to the bit on being a capitalist here. I think it works pretty well. And I think a lot of the problems that we're running into that people ascribe to failures of capitalism are really actually more of this thing where we're not allowing capitalism to do its sort of organic motion enough. I mean, it's amazing to me that you'll see our politicians going on to, go on Twitter and they're like, we got to build more houses to make it more affordable. I'm like, well, how about we stop making the decision that housing as an investment is something that we're going to support as a society? Like, that seems weird, because what that's going to do is attract a ton of investment money into housing and run the prices of housing up.
I hear your criticisms here, but I also look at it and go like, but isn't the end game for capitalism like essentially the tokenization of error? Like, everything should be constantly going up in value and making everyone money. Isn't I know that isn't what capitalism means, but I'm just saying that the concept is to always let the free market speak. And if you're going to let the free market speak, the best thing you can try to do is find little things to make the market in your advantage you. Now, I understand that you shouldn't be able to make the market advantage you in a purely capitalistic society, but we don't live in a utopia. You cannot have a purely capitalistic society, and therefore there are going to be market inefficiencies, and there's going to be you're saying, people want rules and regulations behind them, but then not always. And we see a Ponzi scheme, and you don't want the proliferation of Ponzi schemes and the free market to decide which Ponzi scheme gets to live or die. We don't want Ponzi.
I think I'm gonna come off very pedantic in this whole thing, but whatever. It's kind of a vibe.
Go ahead.
So let's talk about the free market thing for a second. There is this sort of toxic hyper libertarian variant of that, which is basically, I think, just the Hobbesian state of nature, right? Like, I don't know, whatever. We're anarchists. So I think we have to reject that and say that what is the market? What is the free market? The free market is the economic activity that happens within the boundaries of the rule of law that we have constructed and continue to evolve. And I'm a believer in that. I'm a believer in the rule of law and the boundaries that we have set forth. The free market is the action of all those little agents within that system, within that game that we've set up, which has well-defined rules. And we largely want them within those defined rules that are defined in advance, right? Like, we have the laws, they're written and all that stuff. We want them to be able to move very freely. Now, occasionally what will happen is someone will find a hole in the game. You're playing, imagine you're playing Monopoly and somebody finds an infinite money glitch within the rules. And what do? You're like, okay, well, we can either stop playing this game because it's not fun when people play like that and it's super lame, or we can just patch the rules. And we end up patching the rules a lot. That's basically what the justice system does. So I think the challenge around these conversations about free market absolutism would say, well, that infinite money glitch was part of the rules when I started playing. And so therefore, I don't think I should get in trouble for it. And you see this is tying it back into crypto. You see this a lot in crypto, right? Code is law and all this other stuff. I was sort of following the constraints of the system. And it's yeah, that's fine. But one of the overlays on the system as defined rigidly by law is also don't hurt people. And you should kind of know that too. And there's a level at which you can be held accountable for knowingly hurting people. And then we come back and we define the rules of the game after people get hurt, such that that's a little bit more explicit, just as a courtesy to our future selves and for posterity. And for me, that is, when you read Adam Smith, he talks about some of this stuff. That is the free market. The founding fathers had this idea about, an evolving structure of how society works. It wasn't this sort of, they sat down at the Green Dragon. What was the name of the tavern? You guys probably know the name of the tavern. Anyway, There's some tavern in
Oh,
Boston.
yeah.
They sit down, they're like, we solved it. After 8 pints or whatever. They're all in their 20s. They're like, we did it. We created the perfect society. They have the self-awareness to literally not do that and talk about other not doing that. And so I think we just sort of have to reject the rhetoric of the free market absolutists who will say things like we should let the free market do its thing and be like, well, that's not what the free market is, man. Like the free market it's a set of rules that we have defined to the best of our ability to create a society that incentivizes people to innovate and all this other stuff. And occasionally people will figure out a way to break those rules, and then we got to patch it. And that is also part of the free market.
So having said all that, Travis, why do you think that most of the public venture capitalists that we end up hearing from are such reprehensible people?
God. So first of all, I don't. I just think there's a lot of loud voices out there that are they're sort of advocating ideas that are not in keeping with that more nuanced free marketism. Like, I read Peter Thiel's 0 to 1. It's an interesting take. Like there's some value to be derived from it, especially if you're in business. I think ultimately I reject the idea that monopolies are the goal for reasons we've already talked about. And I sort of reject that entire line of thinking. Like what I want is to be, I think the right way to approach venture is to be fast and be first and have that define your destiny. To just sort of a constant competition. Like you want to be out in the market first. You want to have a 6-month lead on your fast followers, and you just want to push. And that speed is what the money's for when people invest in you. It's not to ladder pull and try to snipe people who are coming, who are nipping at your heels. I just don't believe in any of that. And so when I hear people advocating for those types of beliefs, as you're well aware on Twitter and more recently on Threads, I just I gotta speak out and say that's not the vibe. That's not the society we want. I think there are VCs that do a good job of that. Logan Bartlett did a great job. He saw the crypto stuff coming. He's like, yeah, I don't really know. He was discussing stuff on the merits. My direct experience with a lot of VCs is a little more early stage. So it's not these titans who are running a $5 billion fund as much as it is the up close and personal VCs who are doing seed investing and Series A and Series B stuff.
I know that it was mostly a joke what Bennett was saying, but I do want to actually say that I hear your response to that, Travis, and I'm like, that makes sense. Of course, there's thousands of venture capitalists. We're talking about
hundreds at least.
There's thousands for sure. Across the globe, there are thousands and thousands of venture capitalists, no doubt about it. But the idea, I think there's validity to what Bennett is saying. The loudest ones are the biggest, worst motherfuckers ever. All of them, almost all of them. The ones who were hyper loud, the all-in crew, A16Z folks and their partners, and those are the ones who were front-facing venture capital. They're the ones who were defining how venture capital is perceived publicly by the regulators, by Congress, who you're talking about. We don't want these people deciding, they're 85, they shouldn't be talking about tech, they don't know what the fuck they're talking about. I agree. And yet, when you have the worst people causing bank runs and shit, how do you counter that? How do you change the public perception of what venture capital is? And that is why that's why I have such animus for venture capital. It is because of those guys.
Well, it's because, see, you're a capitalist. You're against the concentration of power and its deleterious side effects. I really do. To me, I try to fit this stuff into some way I can think about things that is coherent across the chaos that is happening in society. Mm-hmm. And I think it's just, American culture, at least, tends to be happier when there's more opportunity. We like that. And the more you get these entrenched power bases, the more challenging it is for us to find those little pockets. I don't think it's limited to venture. I think your critiques are fair. I'm here to sort of advocate for the venture capitalists that I've met who are not doing that and who are still funding our industry and funding innovation. And I'm a staunch ally of theirs, despite being brought up by my father to never trust a banker. Working with good venture has sort of brought me around on that. I think there are financiers out there that help help run everything, help run my life wouldn't be the same, because you have to fund these startups. Every software startup is this like capital hole that you then have to like climb out of. We just wouldn't have the cool stuff we have without the venture model. Now, I think in addition to that, we need to look at a bunch of stuff like politics, term limits. These people just get into a chair and sit there for 50 years writing legislation. I'm like, I don't know about that. That maybe we should mix it up a little more. And one of the things that's really fascinating on the venture front is there's been a bunch of studies around sizing of funds. Venture is healthier for itself when you stay within a certain fund band that is like sub $1 billion. So when you raise a fund that is, I haven't looked at the numbers in a few years, so I don't want to throw something out there. But when the optimal venture fund is actually smaller, call it $500 million or something. And then you go allocate that stuff, those funds outperform by a lot. And so I think that the way to counter this is a combination of just like bringing awareness to the fact that these monster funds, their incentives change so that they're more about the 2% carry they get than the 20% upside. And that's a little weird. And like maybe as an LP, you should think about not putting your money in that and instead spreading it around to a bunch of smaller funds. And I think that the cure for a lot of the stuff we're facing is this return to like the original idea behind localism. The original idea behind localism is not like go down to that shop over there and buy their food and they're getting it all from Cisco. Like the hope is that they're also buying locally. And what you really want to do is spread the economic activity across the country so that it's more robust. And I think you also want to do that in venture. I think what you want to see is LPs allocating to these smaller funds that are more profitable, that don't have an incentive to go build a monster megaphone so they can just cream 2% off of, multi-billion-dollar funds and stuff. To me, that's the solution.
It's so funny because, again, that goes right back to this, where it's like, I know I'm essentially taking the, anti-capitalist stance or something. Like, I am not anti-capitalist. As much as I have animus for the loudest venture capitalists, I don't hate the idea of venture capital. And when I go back to the early parts of venture capital, it's localism. It's what you're talking about, right?
It is.
Like we have Fairchild Semiconductors in Mountain View, California, working with students at Stanford and Berkeley, who are getting general contracts, like getting contracts from the government through Lockheed Martin or whoever, right? And academia is working with private they're all working together to do something, and that is localism. That is they're all building something better together, and they're keeping it in their club, so to speak. But the club is large, and it gives us things like DARPA and ARPA and the internet, and that's what I like. I don't know, again, going back to what you're saying, is Lyft and Uber a huge leap in innovation like DARPA and ARPA? Like, no, it isn't. I think it's easy to say no to that. If that's most of the innovate. Sorry, go ahead, Bennett.
I just want to interject though, and Cass, and go and how much of that which direction is the arrow of causation running here, right? Because didn't the Department of Defense initially creating DARPA kind of create the set of contracts that the initial group of kind of the Bunker Hill companies were competing for and stuff like that? And so it was the direction wasn't venture capital funded these things then created DARPA, which ARPA, and then the internet. It was that the DARPA project was created, which set up these contracts, which then companies wanted to compete for companies to compete for those. They needed funding to get projects off the ground, things started, things like that. And so the arrow there went from the Department of Defense creating this government contracting project, basically. This collection of kind of ambiguous and large dollar amount government contracts is essentially kind of what it was, led to then the rest of the stuff coming afterwards.
I mean, I think that's I do think that's not as uncommon as we might think it is, right? I do think here's a simple one that it doesn't have the same large scale effects that the internet does, but drones, obviously that was a military contract from the very beginning, but now that has been utilized by people to do all kinds of things, and some of it is great. Some of it is you can scan the land and figure out the proper place to put certain things, or there is actual great use cases for something like drones. Also, they're murdering people. So like it's, I get it.
I guess that's kind of my worry. I worry that if you set that up as like the desirable version of venture capital, then the thing meant to inherit it is Anduril and Palantir, right? Is like the modern Silicon Valley funded companies which are competing for government contracts from the Department of Defense, right?
Yeah.
I think that, I with this topic and a lot of times I just circle back to this idea that what we want is a less incumbent centric economy. Like that's the fix. The fix is not so much just to steer away from capitalism. Like I actually just think that's absurd, and continue to fight anybody on the internet who suggests it. But I don't know that we want to even put this albatross around venture's neck, but we still want to call out the sort of like pro oligarch whatevers, these like neo oligarchs who just think like it's like, let's take all the power. I think that it's important to push back against that. There's almost a societal duty there. And I think part of this ties back into another one of my, pet topics. It's just sort of like the way that we conduct everything from monetary policy to legislation. Like it just needs to be a little less incumbent centric. And what that means is we have to be okay with incumbents taking losses.
But I do want to push back on that just on two levels. So one, I know I personally am all for having term limits and stuff like that. But when it comes to people who are pro free market, they say, why would you take away someone's ability to vote for whoever they want? Like if I want to vote for the same guy to be senator for 2.5 decades, that is my right. That's my God-given right or whatever. So I want to put that out there. But I also want to say this, that when it comes to business or finance or whatever, I don't actually have a huge issue with the concept of incumbency, right? Like the best example I can do for this is actually a restaurant, because for me, when I worked in restaurants, what I hated about it was I would go to these small restaurants that were well-known or popular bakeries, and they would be starting out. They'd be in their first year or 2 or 3 of getting going. And they're like, we got to grow. We got to open up a second, third, fourth restaurant. And I'm like, why? Stop. You're already making money. You have enough employees. Stop. You're good. And in places like Paris or Oslo, when I went and visited them years ago, you have one patisserie or, bakery that's been around for 350 years. There aren't 12 of them. There's one. And that is fine. Like, I am fine with that. That's great. You have culture, you have history, you have one bakery that's had all this time there. Fine. But I don't want one Amazon for 150 years. That is where incumbency gets to be. When it gets into oligarchy is the problem. It's not incumbency itself that is the issue, I guess is what I'm saying.
It's incumbency around power, and economics plays into that. Yeah. I mean, in an ideal world, we run a society where like we try a lot of different stuff. And then over time, and like you're only going to, people only have so many ideas. These people get into their like 30s and 40s, they get kind of typecast. So, and we've got, and then we just let them sit in that chair until the end of time. Like we know what we're going to get out of them. And so, this idea of I have a right to vote for who I want, I'm not even sure that is, I mean, to me, it's almost a pure straw man when people say stuff like that. Because, you look at the presidential candidates we've got now, and I'm like, okay, how did those get to be the candidates? Like what? Like, I'll tell you who I want to run and stuff is, it's not them. Like, let's just get somebody in there who's like fresh, like just has some fresh ideas. Let's put up to, like, I just think it's a myth, this idea that we get to select whoever we want. So stuff like that, I think we just reject it.
Part of my issue with even like the presidential, like the 2-party system is a problem for me, just because I'm like, it's like a fallacy that's been concocted against ourselves that we are convinced is absolute, even though very explicitly you can always vote for whoever you want, actually, right? You always can, like anyone over the age of 35, you can vote for them to be president, technically, right? Yeah. But like we've decided that means there's 2 people that you can vote for. Well, 3. You can vote, or the brainworm. You can vote for a brainworm or 2 individuals. But yeah, like I do think that it's unfortunate because it's a self-perpetuating system, like oh, well, then there's two parties and therefore there's always two parties and there's nothing we can do about it. I don't know.
I think the two-party system can work well. You know, I would point the finger here more. I mean, we're getting off on a tangent. I love tangents. I would point the finger here more at like, when you think about in aggregate from a societal perspective, who are the power and money incumbents? And like, they're the boomers, you know? I got nothing against boomers generally. I like to sort of, you know, talk shit about them because it's fun. But those are the people who are sitting in all of these chairs and they're making a bunch of decisions that are very like pro-incumbent, right? Like, we can't let the housing prices fall. We can't. And then you look around and you're like, what's the problem? Well, millennials and below are like, how am I going to live? Where am I going to live? And then the boomers turn around and they're like, well, you can't live at home. Yeah. Like, so we're preventing this sort of churn in the economy around housing that happens when people get rinsed because they make bad decisions. And now that we have the up and comers who like can't really get a toehold in the economy because the entirety of the legislative body is dominated by socio-political, economic, however you want to frame it, incumbents. Like, and they've just got this lie. I think it's a real demographic challenge in some ways, which I think will eventually clear here. But as we look across the effects and like diagnose society, I'm very wary of like anything that ends with like, ergo, we must return to free market absolutism, or ergo, you know, capitalism doesn't work. I'm like, I don't really think so. I think what we got to do is sort of just like clear out the dead wood. And it's been a very long time since we did that.
Any libertarian who's like telling you Adam Smith didn't go far enough is probably not being particularly serious, and you can probably ignore them.
Well, they probably haven't read Adam Smith. I mean, like, you can go read it. I mean, my favorite thing is just go pull quotes from Adam Smith and be like, okay, talk to me about this one. You know, reasonable boundaries are on around the game of the economy. Like that, it's just like, you can't find an intellectual tradition that was arguing against that. You can misrepresent one.
I don't know. I've got some Ayn Rand books behind me if you want them.
Yeah.
Reading them 6 times wasn't enough, huh, Bennett?
Well, I mean, I'll probably read them again at some point in my life if I'm being
Why
honest.
do you hate yourself so much? What's wrong with you?
I find lots of twisted things deeply fascinating.
You don't need to read Ayn Rand again. So, yeah, do you have anything else you wanna throw out there, Bennett or Travis?
I guess my parting words here would be like, with it, you know, as we take back to the rough streets of the internet here, on our tweeting or whatever we're doing, like, I think there's sort of this dual mandate, much like the Fed. And the dual mandate is basically like, when you see this stuff that feels kind of corrosive, you know, you got to go after it. But I think the other side of that is it's just important to avoid condemning the superstructure that actor lives within. Like, you know, there are startup entrepreneurs out there misbehaving, you know, and I'm a startup entrepreneur, and I'm like, okay, well, I think we got to talk about this misbehavior because it's, you know, we kind of got to police our own here a little bit. But it doesn't really mean that like startup entrepreneurship is a bad thing. And I think if anything, we have the extremism of sort of social media echo chambers has this tendency to lead us down these little sort of mind tunnels where we end up concluding like that entire institution needs to go. And I guess my call to action is like, let's stop doing that. Let's keep talking about the stuff that we don't want and how we need to, like, you know, keep improving the rules of the game so that it works for everybody. But condemning these, like an entire school of thought, even libertarianism at the end of the day, there's some good stuff in there. You know, it's, yeah.
Huberman Labs, though. Huberman Labs, we can condemn that institution.
Boy, that guy became the main character pretty quick.
All right. Well, awesome. Yeah, I think that's a good nuanced note to go out on. And yeah, if anyone wants to follow Travis, I guess he's spending more time on Threads these days. So are you at Colorado Trav there as well?
Yes, at Colorado Travis. I finally got my handle over there. It's like
nice.
my first time on the Zuck platform. It's pretty good. I think there's it's a little bit of a different group over there. I'm still on Twitter. Like, what am I going to do? Leave.